YouTube, top chat, live chat. Wah, wah, wah. Okay, why is this? Let's see, you. No, I gotta close this out. I'm gonna have to recenter myself here. Let's see, you. Your channel. There I am. 1226. And then I've got to go over to YouTube and monetize this mofo. Okay. Let's see. YouTube Studio. I'm on early, so not everybody's going to be coming on. Content. Live. On. Save. Okay. Saved. We'll close that down. We'll get to the scans. Market scanner. Daily stock picks. Scanner. Roblox. I haven't updated my brokerage holdings in TrendSpider too well. Covered call, energy names, NXE. Oh, I have got to get the dogs downstairs too. FNG. That is a cross up. Ooh. Ooh. 3 times inverse levered FANG. Low cost Vanguard. We're not going to include those. Why not? Okay, do I have to let you downstairs? Spider sectors not owned. RCL. ETH. ETH has a cross up. I gotta look at Mara. Not owned. And then we'll look at the Dow. Merck. I mean, Merck is just one. I'm not a big fan of Merck, but it is in the Dow. So it's 1 of 30. NASDAQ 100. Kellogg Dr. Pepper, kind of just putting up there. Monster, Copart, BIIB, Biogen. I mean, Biogen is one of those that may take off, but let's look at S&P. Okay, hold on. I'm going to get done with these scans. Colgate, Merck, American Tower. Are flying again. Okay. You want to go downstairs? Okay. You want to go down and say hi? And I am going to start this real quick because, God, man, why does taking dogs downstairs wear me out? Oh, there's my water. Your boy's having a heart attack again. My goal in 2024 is to get back in shape. Okay. Let's look at Okay, go and look at that one. Okay. Good morning. It is Tuesday, December 26th. Merry Christmas, and welcome to everybody with a Merry Christmas on the Daily Stock Pick newsletter. I did a video. It was part of a paid newsletter, but the video was free. If you're not signed up for the newsletter, you should probably sign up for the newsletter and other things, because Linktree, the link down below, linktr.ee/daily stock pick, you can get everything that you want over there. Newsletter is the fourth one. We got Webull. Start your 2024 with $1,000 in Webull. Join me. I've got $1,000 in Webull as of the end of last year. I now have, let's see, the link is down below too, but I have got $3,700 worth of stuff. So really, really solid, solid. Yeah. So that's good. $3,700. Hey, not bad for turning $1,000 into $3,700 in a year. Let's start out with QQQ, because where are we? And here's what you want to kind of look at. There's a good video. I'm going to include all of this in the newsletter as well, but a great video with Tom Lee about going into 2024. There's a lot of tailwinds coming together, what he expects. Tom Lee, along with others, expects small caps to be, and that would be IWM. But what I really want to start off with is QQQ. In the newsletter this weekend, even though it was paid, part of the free portion was just a look at QQQ. And I wanted to point out, if you bought QQQ in December of 2021 and you're just sitting there and throughout the year and you were sitting there with a loss, you're finally back to close to even. If you bought sometime in January 2023 or December 2022, then you're way up. I mean, 52%. What this points out is the Bob story. And the Bob story, if you don't know it, go back and look at the newsletters. Just search on the newsletters for Bob. You'll see it is about being in the markets and not getting out, and constantly just dollar cost averaging. But it's important to understand this is the reality of this market. If you look at a monthly, if you go and look at a long term of this is the Qs. And if you were to look at a long term of this, look, I mean, this pullback was a good pullback to try and get into. Yes, it was an opportunity to get into the market with this pullback. You can see here 2008, 2009 was a good opportunity to get in. You can see 2020 was a good opportunity to get in. Even the 2000 dot bomb was a good opportunity to get in. You went through many times where you lost, but you're up at all-time highs. So what should you do? The first thing is, don't listen to douches on the internet. IWM, for everybody saying small caps and big caps are the way to go in 2024. Just imagine if you had gone into energy in the middle of this year and you had gone all in on energy and said, hey, everybody's saying to get into energy, so I'm going to go all in on energy. Well, you wouldn't have made money and you would have missed out on this big year-end rally. If you had bought in June, July energy, you just didn't participate. If you traded energy, that's great. But I want to point out is if you are a big long-term large cap tech investor like me, you may get lost in all of these messages with everybody saying the Magnificent Seven, the Grade 8 are going to go down. They're not going to lead. Don't change strategy. The point is, make sure that you're strategizing. If you want to switch to small caps and things of that sort, I think there's a lot more active management in that type of portfolio. But understand where you're going. Be an expert on the charts that you buy. Be an expert on the indices that you buy. Be an expert on things that you're investing in. Don't all of a sudden just listen to some guy on the internet and say, okay, I'm going to go all in on this one. Watch Tom Lee. Tom Lee is probably the most famous bull because he's called actual weeks at this point, where he said, hey, the Fed's going to hold back and we're going to have a 2 to 3% rally, and you could have participated in that. He's been just legendary. So I'll include this. I say you watch this, what is it, 5-minute video? It's a great video. I'll include it in the newsletter. Also, year-end tax loss harvesting. Understand the last day to tax loss harvest is Wednesday. That's going to be your last day to really take a hold of it. So if you're employing that strategy, I urge you to read this article. I saw this great video online about SPGP. It's GARP. And Victoria Media, she's great. She analyzes everything. She uses Seeking Alpha. She is a part of the Seeking Alpha, I guess, affiliate program. So she really, really does a good job. If you're interested in growth at a reasonable price, that's what GARP represents. Understand SPGP. SPGP is a symbol that you may want to look into. I'll leave it to the video to kind of show you. CMG, which is Chipotle. Chipotle is a Mexican grill. I am not into $14 burritos. I absolutely hate their rice. And excuse the pop-ups, but for some reason, YouTube won't let me show videos on Safari without the pop-up or disabled. So I get quite a lot of pop-ups right now. But there was a lot of insiders from director Greg Engels. We can look at CMG. Their PE for a restaurant is just super high at 54. This is a $2,300 stock. They are right at their 52-week and all-time highs. They're doing really well. They're up year to date 66%. But their PE is high. And I've never, necessarily invested based on PE. But for a restaurant, it kind of gets a little tough. Wedbush outperformed in neutral. They reduced their price target to $2,400, which was what? A 4 or 5% gain from here. But what I wanted to point out is that Greg Engels it wasn't buys. Greg Engels' first insider buy of CMG, nearly $2 million worth. So it's a little bit more than a pool in the backyard. But it's nearly $2 million worth of stock on December 15th at $22.84. And you're trading at $2,300. So you're not far off if you want to look at CMG as a stock that you may want to invest into. My algorithm makes you 106% over 2 years versus making 30% buying and holding. You've got some gaps. I mean, the gaps have been filled, so I wouldn't necessarily worry about them. The only worry that I have in this one, if you enjoy $14 burritos, if you like shoving, mint, what is it, saffron flavor? I forget the flavor that they put in their rice. I absolutely hate it. Give me plain white rice. Yeah, I'm horrible at that stuff, but just give me plain white rice. And when I ask for it, they're like, no, we don't have any. But they do make their fresh guacamole every day. So Chipotle, it's my thing. But that big buy did catch my eye. It was interesting. Super, super interesting. And let's take a look. One thing that I wanted to point out is that I sold out of my XLY. And here we are in Seeking Alpha, and I sold out at 180. And the reason I sold out at 180, I've gone over in the newsletter why I like, I looked at XLY, XLK, and other sectors. XLY is still a great sector, spider sector. It's the consumer discretionary. If we go over here to holdings, we can see half of this, 23% and 18%, almost half are Amazon and Tesla. You got Home Depot, you got McDonald's, you got Nike, you got Lowe's, you got Booking Holdings. You just get a great basket of stocks in this. What my issue was and why I sold out of it, and I sold out of it not completely, but a large majority in my retirement portfolio. So it wasn't a tax event. I did sell some of mine in my brokerage to tax loss harvest and to gain some cash for next year. And the reason being is I want to redeploy this. And the reason I want to redeploy this is that 52-week range. And I often call them sliders. I think they're sliders. You have them in Fidelity. You have them in Seeking Alpha. If you look at this 52-week range, the 52-week high is 182.19. And on Friday, I saw it at 180. And I said, let me just put in an order on Friday. And I put in a couple of orders at 180. And I sold a large amount. I mean, we're talking probably mid 5 digits. So I just sold. I mean, it had grown to a large amount of my portfolio. Amazon's not at a 52-week high. If we look at XLY specifically in the algorithm right here, in the 4-hour algorithm, we'll kind of bring this one down a little bit so you can see. I saw this kind of at 182 coming over here, maybe a little bit of a dip down here to 177. I'm looking at a couple of gaps that haven't been filled, specifically 162. I think the volume level is going to keep it up here. So I don't expect it to come down significantly hard, but look at how high it is on the MACD. Look at the RSI at 63 coming off 81. So I figured it might be time for a little bit of a break. Now, XLY is how I play Tesla. That is how I hold Tesla. I am looking at their year-end stuff. I'm seeing a potential golden cross on this one, potential gap below, currently 25% since the November entry. MACD is starting to cross down again, RSI at 56, which is in no man's land. I don't know where Tesla is going. I just figured at the 52-week high or close to it, I'd get out. And so, again, Seeking Alpha analysts say hold, quant says buy. I probably went against those. I figured it was the end of the year. I'm rebalancing. I thought it was a good opportunity to try and get this. Now, a couple of things to look at over the weekend or after Christmas. If you go into the App Store, what was the most downloaded app? It was MetaQuest. That tells me a ton of people bought that damn headset. This could be bullish for Meta. Meta is down right now. It's trading at 353. Which is quite a if we go over here to Seeking Alpha and we look at Meta, if you look at the range again, it's 357 was the 52-week high. So you're super high. Seeking Alpha analyst, buy. Wall Street, strong buy. Quant rating, strong buy. The only thing that's bad about it is the valuation. If we go over here, because most people have access to FinViz, and Seeking Alpha, portions of it are premium. You can get the link down below if you want the premium version. And again, I apologize for the pop-ups. But Meta's PE is 31. The forward PE is 20. I don't think that's a crazy price for a company that's printing money with their advertising business and getting into the hardware business in a fairly big way. We do know that Apple's Vision Quest or Vision Pro is coming out later this, probably in February, I think is the expectation now. But if Meta sold a ton of these things, I mean, that just solidifies them in the game. And now I don't think that Meta is going to displace Apple, but if they can get behind them, kind of like Android got behind iOS after the successful iPhone launch, that means Meta's number 2. That means that PE, that forward PE, might actually come down if they have additional revenue. So I think that was interesting. The other one that was that was downloaded was Amazon Alexa. And Amazon, I just don't think you're done moving on Amazon. Like I said, at 120, I bought a ton of this. You're still about 13-14% from your all-time highs. I think you get up there to that 180, 190 level. It's up 0.33. We are in the Santa Claus rally week this week, so might be interesting. An opportunity that I saw for January, and if you want to get in now, it might be a good time. It's just a little bit tricky. BABA. China stocks are a little tough. BABA January is the best performing month of Alibaba since its IPO back in 2014. If we expand the seasonality here, you go back 9 years to 2014, you can see 67% win rate. Now, December has been a horrible month for BABA, past 14 years and this past month, but 67% win rate with a mean change of 6.94 might be an opportunity to buy BABA. Here's what I noticed too, and it might be an opportunity to buy BABA because when we go to weekly, and again, I'll include both of these in the newsletter, but you can see the first week of the year, 78% win. The second week, you get a 67% win with a 2% win on average, mean change of 4% in the first week. So again, if you want, it's an idea, you could go at it, but I'll include both of those charts in the newsletter. You can see it's down here. It's just kind of been hovering. It's at 75. The algorithm got you in at 72. The algorithm does work on this. Doesn't make you money, loses you 0.4%. But if you bought this 24 months ago, you're down 35% if you just held. This gets you in and out. Let's see how many positions, 30 positions over 24 months. So this could be a winner. I don't know that the 50 days moving positive, but the 9 days moving positive. So you do have some kind of confirmation. I just figured it was a good time to kind of look at that just because those seasonality kind of stats look good. So let's go into crypto. Went nuts. On Friday, I did buy Mara, and I bought Mara at $26, I think. Right now in pre-market, you're down at 2.17%. You're at 26.13. So I'm probably about even. I think I was up like 4 or 5%. I think it got to, 27 something. Let's see. In the market on Friday, it was at 27.43. In the afternoon, it got to 27.73. So I was up. I'm down right now. I'm looking at holding this one. I'm not looking at selling this one. I'm looking at holding this one for a few weeks. I do like the confirmation here. The run scares me a little bit. I didn't buy a ton of it. I think I bought 100 shares at 26, so it's $2,600. Wasn't an enormous one, but this article in the newsletter, in Seeking Alpha, number of crypto stocks at 52 weeks high on Friday, has Robinhood, has BITF, CLSK, Coin, MSTR, BKCH. Read this article. Just look at some of those names if you wanted to. I chose Mara. I've been meaning to get into Mara. I finally got Mara. If it goes down, you can call me the mooch. You can say, hey, this guy, he ruined it for all of us. One thing I do want to point out, I'm going to go into social requests now. A paid sub. He left me this message, and it was great. You're not only a hard worker, you're genuine when you compare it. This is when you pay, I guess, for the newsletter, you can leave me a nice little note. I read these. I read every one of them. What caught my eye on this one was you always talk about the douche on the internet, and I know one, Meet Kevin. Meet Kevin is just an a-hole. I mean, I just don't like that guy. And if you don't, you can Google his DUI, which he got out of, and he brags about getting out of his DUI. He was drunk. He just knew kind of the law and got around the law. Just, again, a douche. Do not listen to Meet Kevin. That guy got famous, I think, during the pandemic when he kind of did some stuff. RIP Austin from Spotify. MODG and GOOS. MODG is Topgolf. I don't go to Topgolf, full disclosure. It's a Callaway brand as well. I prefer TaylorMade clubs. And it's been years since I played golf, but I was never a huge Callaway fan. I do like Callaway as I get older because they do cater to, from what I remember, the older crowd. You can see the algorithm, it loses you 26%. Buying and holding this one loses you 47%. This is just a high-cost business. If we go over here to, no, I don't want this. MODG. God, I got to get this blocker back on. But MODG right here. Hold on one second. I'm going to stop recording. Morning, Joe. Morning, Scott. I'm trying to get out of here, but I got to turn on this damn settings. I can't take it. Ads and privacy. Okay. We're going to close that window. And we're going to reload FinViz because then we'll get the ad plop. There we go. Okay, MODG on FinViz. You've got a PE of 30. I mean, forward PE of 38. Which one do you think is actually better for growth? MODG or Meta? Because Meta is actually less expensive. This one's down 27% year to date. So I just kind of point out, MODG doesn't excite me. If you go to Topgolf, maybe it's exciting for that one. If you play golf, maybe exciting for that one. They have some insider buys. This guy bought almost $2 million at $19. He's way down. That's the director. President and CEO has been buying a couple $100,000 worth of shares, everywhere from 19 to 12. He's getting paid that amount of money per year, so it's not like he's putting his net worth really online for this one. I'm just not, the average target is 1534 and you're trading at 1426. I mean, I just don't see a big upside for that one. GOOS. Is this Canadian Goose? Yeah. Canadian Goose Holdings. This was a fan favorite, a retail favorite. It's down 32%. Its PE is 23, forward PE of 15. They're in apparel. So, I mean, that's a big PE for apparel to try and grow. They're down 51% from their 52-week high. So, it's got a 31% short interest. I think people are betting that this one actually goes bankrupt. It's got a huge short interest. I would not play this for a short squeeze, but GOOS, if you want to see it in the algorithm here, it has a buy here at 1024. You're at 12. You've got some positive momentum that kind of seems to have gotten done with that MACD move. I would be getting out with a profit if you got in at $10 on this one and just taking your profit, because the long-term outlook of this one is not good. It's just not good. I mean, look at how much it's fallen. So if you've gotten in on this late year run, I'd take the profit. I mean, honest to God, I'd take the profit. It's just, it's not my thing. Let's just say that. Dex from Spotify asked me about JEPI. So JEPI is a high dividend payer, and this is equity premium income. So it's not one that you typically want to trade. And you can see this one from November 1st, you bought at 52. It's a nice rally here of what, like 8%, somewhere around there, 5%, 5.1%. You just crossed your 200-day. You had your golden cross. It's an opportunity to buy, but really with JEPI, I would Google and go on YouTube and watch some videos on JEPI, because its dividend is 8.6%. That's what you're buying it for. You're buying it for the income. So essentially, if you want to look at this one from a long term, I don't suggest trading it. But if you're buying this for the long term, it doesn't have a ton of history around it. But if you bought this way back in 2020, say you bought this in May of 2020 when it first came out, it had a fairly big candle, 1.37. But May of 2020, you were trading you opened at $50.55. So 2020, you've got your 10% income plus you got 8% per year. It's not horrible, but you could have bought Apple back here and probably made close to 60 or 70%. So it's just about what you want. If you want income, JEPI's your thing. If you don't want income, you're not protecting your capital. What they're doing is they're playing options. They're playing short and puts and calls, and they're buying and selling those in order to collect premium. This is just, if you are Walter, if you are 70-something years old and you need income to live on, JEPI might be your thing. Just to understand, the value of your actual asset goes down because all they're doing is buying some income. I'd rather see you in a 20-year bond that pays 5%. Rather than get 8% and lose your equity, get a bond that pays 5%, for 20 years and or 10 years. And just sit in that and collect 5%. That would be my thing. God of War, Hershey's, HSY. This has been killed. I mean, this is just it's out of favor. My algorithm loses you 4.5%. If you bought this 24 months ago, you're down 3%. There hasn't been a reason to get into Hershey's. In fact, today, Hershey's is one of the scans that came up on the scan, and you can see it 182.52. Am I getting into it? No. I mean, I'm just not. Its PE is still a little bit high for a chocolate company. 19 on the PE. Forward PE is 18. They're 34% below their 52-week high of 278. They are right at their 52-week low of 178. It doesn't excite me. Year to date, you're down 21%. The average target price is $212. But that includes a lot of older target prices. You can see here the most recent Bank of America Securities, they lowered from 250 to 200. They're not done going down. I don't see this company being done going down. You can see from their earnings, $2.01, $2.06, $2.60. It's the cost. Their cost is going up, and they're just not doing a great job. So I'd probably stay away from Hershey's. I think there's better places to put your money. Doesn't mean it won't pop up, kind of like Nike. I mean, Nike, we talked about Nike being a beaten down stock and how you wanted to get in under 100. And now it's it was up here at 120. It's at 108. I bought in at 126, 124, 120, I think maybe 122, somewhere around there. I bought right before earnings. So I did a complete mistake. If you want to read about my mistake, it's actually in the newsletter. It is right here in this newsletter about how I've just got too much cash. And cash is dangerous for me to have. I'm used to being invested in the market and taking one stock, selling it in order to buy another. And now that I've got cash, I'm just randomly out there buying. But Nike was a solid play. But I think Hershey's, I just don't think you want to time the bottom. Unlike Nike, Hershey's has some operational issues that I don't know details about. I just kind of headline read on that one. And you know what? Here, let's go over to Seeking Alpha, because this is usually pretty good at looking, the quant stuff is usually pretty good at trying to time it. They still say hold. And Seeking Alpha analysts are trying to buy it, but it still says hold. The quant rating is what I would look at here, 2.61. I just don't think it's done going down, but you can see 5-year, we're just in that tail. You're right at where you were, November 9th of 2021. So look at that slider. It's just, there's nothing here that excites me. So God of War, I'd probably wait for that one. Zach from Spotify. First Solar, I know you shit on Sedge and Enphase earlier this year, and rightfully so, but this one seems much more solid, and Solar will recover eventually. A lot of green upgrades on FinViz. Hey, I like when you go to FinViz and look at that stuff and give me a reason to actually look at this stuff. First Solar, I like it. I do think, here's the thing. If there's one industry that's going to benefit from lowering interest rates, it's this one. But most solar scares me just now, and I like to trade it. I don't like to own it. But that PE of 38, you can see that PE of 38. The average target price is 231. You're at 170. You're right in between your 52-week range. That 231, by the way, is actually its 52-week high. So you're unlike Sedge and unlike Enphase, you're up 13% year to date. So you can look at that. Do we have any insider buys? No. Everybody's selling. I mean, they're just selling $1 million worth from their CFO on September 1st at 186. People are selling December 19th. Dude sold $500,000. The chief commercial officer for 176. So, I mean, he sold almost $1 million. So maybe he needed a pool or something. But I mean, first, I think solar's one to get into. In fact, you can see 159 was the buy here. You've got a positive 50-day. You got a positive 9-day, positive 21. They're kind of crossing up. If it holds 164 in the short term, it's kind of capitulating around here. I think you've got that upside there. And First Solar, I think I looked at it before because I see that yellow line. Getting back to all-time highs will be tough, but plenty of room. If this is the bottom and rates start being cut and solar comes back to positive, I don't know where that was. I guess that was a couple weeks ago, but December 11th. So 54%. I mean, if you want to get in there, I don't think there's anything that's highlighting me as this is horrible. I mean, Enphase and Sedge. Enphase is up 64% since the beginning of November. Again, lower interest rates helps solar. So I think it's good. TM from Spotify wants me to look at Shopify. You guys know I said Shopify is an $80 stock before the end of the year. I thought I was crazy when I said that, but I did buy in and I bought more of it. In fact, you're seeing the capitulation here at 76. Do I think it hits 80 by the end of the year? I think it's going to need some type of catalyst. Maybe they come out with some crazy, Christmas numbers that justify it. But long term on this one, I think you're fine. I mean, if you want to get into long term on this one, you're using that 200-day as resistance. Until it gets over that, I wouldn't necessarily think that you're going to have a great opportunity in this one. But I think in the new year, we get back to the 100s because, again, lower interest rates helps these guys. Small business. If small business is the one that's going to benefit, small to medium businesses, the IWM, Shopify is the one that's going to help them. So I don't think this one's a bad play at all. It is expensive. Understand this is expensive. If you look at Shopify, they're not making money. The forward PE is 74. It is 3% from its 52-week high of $80, which came back, I guess it almost hit 80. Yes, $79.99 back here. So it almost hit $80. It almost hit my target there. But the average target price is 73. It's expensive. I probably wouldn't get in right now until you get over that 200-day. There's no insider stuff going on here. I don't think there's anything crazy. If we go over to Seeking Alpha and we look at Shop, I think they just ding it on valuation. Yeah, valuation's a D. Everybody says hold. It's run a little bit. That's the only thing that you're worried about with Shopify is it's run a little bit. My algorithm loses you 16% over 24 months. If you bought and held, you lost 45%. Super volatile stock. You want to be in this one before it gets to the 100s, but I don't think you buy here. And the only reason I don't think that you buy here is because you've got this gap down here between 62 and 63. I don't think you revisit it, but I think you cool off a little bit. I think we're seeing a little bit of cool off. If we are going to get up that high, I think you get higher in the new year. Let's talk about scans. Roblox. Got another. Is there anything stopping Roblox? I mean, Roblox, we've talked about it since 27 here on September 27th. Anything under 40 is a solid buy long term. Watch the charts right now. The algo has a 54% gain going in this one. Well, it's not 54% anymore. This is up 60, almost 70%. 70%? Yeah, over 70% because I didn't draw that line effectively enough. But this one has a solid move. The algorithm loses you 43% on this one, but buying and holding loses you 57%. Incredibly volatile name. Understand, Roblox is incredibly expensive. Their price to sales right now is 10.91. They're up 61% year to date. If people bought the metaverse glasses, I don't know if they can use them on Roblox, but talk about how many people got their kids Roblox gift cards. Hershey's, we talked about, has a cross up. The other one that I want to talk about, and there will be more in the newsletter, but AMT, American Tower. This is one that got a cross up here, and it's gone up from 175 to 215. This is 175 back on October 27th. You guys know I hate REITs. I can't stand REITs. But this is up 25% in 56 days. And that's just because if we go to a weekly, look at how beaten down this is. And this is it's just crossing up on the oscillator. The RSI is at 63. It's incredibly overbought right now. But if you look at AMT, they have what? They have a 2.97% dividend. Year to date, it's up 1.57. This was negative all year. It's finally up 1.57. You're 8% from your 52-week high of 235. The target price is 225. So you're not far away from the target price. The most recent target price was December 14th. They say 245. You're trading 215. That's about a 10% move. From insiders, you can see they optioned exercised at 87. The last sale was from Joanne Reed, who's a director. She sold 891,000. It's not big. The EVP on August 17th at 178 sold 1.7 million. So they're obviously higher than they were. I still think they probably have room to grow. It's not an expensive stock from a historical standpoint, but the PE right now is 141. They're just it's a cash flow problem right now. So they're not making as much money. So is the dividend in danger? I don't think so. But I wanted to point that one out. Merck, ETH, Hershey's, Royal Caribbean, FNGD, NXE are the other ones. I will include them all in the newsletter. If you have any questions, go over to the link tree. You can join any of the social platforms up here. TrendSpider, let's see, do they have a sale going on? If you click on that link, you get the best pricing that's available. So if we go over to pricing and look, it is $397. You got 16 hours left on this sale right now. Get it before the end of the year. I think this one ends really at the end of the year, not necessarily 16 hours, but I would trust that 16 hours. Again, $400. If you're trading and you're trading like me and you're protecting your portfolio, just XLY. I had a few $100,000 worth of XLY. I sold mid 5 figures of this one. The charts protect me. Now, the algorithm didn't get me out. I can think that the algorithm will get me out. You can see the MACD crossing down. This is the 4-hour algorithm. Tells you when to get in, when to get out. But what this did for me was when I saw that little button hook, I said, sliders at 52-week highs. I saw this little curl. It probably on that sale, even at 179 when you're selling, if this gets down to the 176, 170 level, that saved me $400. So it's not just about the cost of TrendSpider. It's about saving you money when you can take a look at those charts and understand it. So TrendSpider is the top one. Seeking Alpha. If you click on this, you'll get the best offer. There is another discount coming up, I think, tomorrow that is a little bit better. Not much better, but a little bit better. I think it's 160 it's going back to Black Friday sale for a day or two. So maybe click on this one tomorrow. But it's $50 off. Whatever the deal that they have, you get $50 off. I think it's 167. So it's significantly more than $50 off. But it's a great deal. Webull, like I said at the beginning, if you want, I just put $1,000 in there. I'm at $3,700 right now at the end of the year. So I think it's worth putting some money into Webull. I love the app. I like trading in the app. I replaced my sports betting with just betting on stocks, during the day. And really the only sport I ever bet on was NFL. So if you have any questions, hit me up, Linktree, any kind of thing. You do have the opportunity to say thank you to me. I got so many messages over the last couple of weeks about how people found me in March, found me in February, found me in June, found me during the bull markets, and they've done better. One guy beat the Qs after he found me. He did have an option strategy, so he was a little bit more risky. But again, you don't have to buy the ones that I say. If you understand options, I don't play options. If you know how to do options, you can use all my tips in the newsletter to play options. It's free and it's simple. The paid portion is only on the weekends. I pay, but my TrendSpider setup I charge you for, but I give a free 7-day trial. So if you like it, one of two things. If you like what I've done this year, you can tip me or just subscribe to the newsletter. One or the other. Or get TrendSpider or get Seeking Alpha. Support the podcast. I do all this stuff for free. So I appreciate everybody merry day after Christmas, and hopefully we have a good year. Remember, this is the Santa Claus rally. So you do want to trade some, but you probably want to get into something today and just hold it. I mean, even if it's TQQQ, I'm still in TQQQ, very small position, but I'm still in this. You've got some confirmation here. If you got in at 45, you're at 50.37. I bought under 50. I bought at 49.99. I don't think if you've got some movement this week and we are in this continued Santa rally, just understand volume's going to be light. People are taking off. There's not a whole ton of catalysts going on other than probably negative catalysts like the Israeli conflict, the Middle East conflict. But there's some stuff going on. I'm particularly bullish. The only reason I sold last week was tax purposes and seeing that XLY was at 52-week high. But I am redeploying cash. I will let you know in the newsletter if I do buy anything. Okay, take care. See you. Bye. Hey, where is SMCI? 290. If you took advantage of the drop, the algorithm didn't get you out. So if you took advantage of the drop, kudos. But I still think it's covering that 350. So let me open up this. And I have got to, hold on one second. Minimize. I don't know if it, let's see. Get rid of that. Get rid of that. Oh, it's a black screen. You're going to have to deal with it. I'll stay on for a few minutes, but I am going to get out of here soon because I have got to go and pick up 1222. I don't want that one. Move to trash. 1222. Move to trash. Move to trash. 1226 at 821. That's the first one. That's the second one. Okay. Wow. I guess I did do 40 minutes. I was going to do a pretty short one, but I guess I did do 40 minutes. Let's just get back here to the beginning. There we go. We're going to trim blade. I might get over here, fit. Gonna hit that. And boom. Okay. Then we're gonna do, oh. Okay. Wah, wah. Okay, I'm at, right here. Right here. Blade. Cut that out. Okay, I'm at DG on. But MODG right here. Okay, MODG on FinViz. We're gonna copy. I'm editing the video. Paste adjustments all. Right here. You've got a PE of 30. Okay, there we go. And I've got to place in some subscribe now. Green, blue screen. And copy. Oh. Oh. Okay. And export file. Next. 1226 pod. Okay. Save. Let me get back in here. Palantir also have $18 call options expiring in a month. What are your thoughts on the call options? Matt, I don't do options. So I can tell you my thoughts on the stock. I think it's $20 stock, but I'm not doing options. In the new year, I'll take some options courses, but I'm in at 1770, I think. I think you ride this 200 day. The 200 days is 1688, so I think that's your support level. But you do have this gap down here all the way down to 15. So we don't have confirmation. You're kind of losing this one. I bought it 1850. I guess I bought it 1850, not 1750. But I bought it 1850. I think it goes back to 20. I bought a small position. I think 1 or 2 shares. So I didn't buy a ton. But I'm looking at this one. If it breaks that 1688 200 day, I think you get down to that $15 gap. So hopefully that helps. And with that, I am out of here. I hope you guys do well. Yeah, my order's ready at Best Buy. So I got to go pick up some phones and activate them for my parents. So I will talk to you guys tomorrow. I'll be back on. Look for the newsletter. Look for everything else. Yeah, Matt, I think if you're playing call options, I don't know what call options are. Honest to God, I'm just confused on options. So I think, well, if that's what you think it's going back up to 18, or you think, I think call options means that you are hoping it goes down. But I'd look at that 200 day. If you bounce off that 200 day and continue bouncing off that 200 day, I'd probably take your profits, because I think you're going to use that 200 day as support, and it's going to get a catalyst and you're going to see it pop up. That would be my play on it. But beware of Palantir, man. That thing will move at the drop of a heartbeat. So I think you'll be fine. Matt, I think you'll be fine. I think we'll have some type of catalyst that'll move that thing. It's just expensive. It's hard to move that